All right, we have just had a slew of corporate results this hour. Visa topping profit estimates as the company benefits from higher consumer spending and the strengthening U.S. economy. Sounds like good news. The market, though, very nervous. Joining me now, Bob Nardelli, former Chrysler and Home Depot CEO. Sir, thank you for joining us. We were talking in the break about this idea that companies are doing so well. The economy is doing well. You look at these earnings, and they're not getting rewarded, at least today. The market down 600 points. What do you make of it? What's your impression?
Yeah, it's really unfortunate, as we were discussing. I think the only certainty today is uncertainty. And these corporations are really working extremely hard to deliver, very profitable and healthy returns to their investors, to their employees, to the consumers, et cetera, Melissa. So it really is, I can tell you from experience, when you beat the estimates and your stock goes down, it's really depressing. I mean, it's kind of a distraction for not only the CEO, but all of the, hardworking men and women within that corporation. So it's a very unfortunate day. Yesterday we saw the decline and then a little bit of a bounce back. People thought it was a good time to get in. Today we're just slammed down. If you think about it, it really doesn't make a lot of sense. Oil's down, gold is down, and the depression in this market, again, it's just hard to explain. It's not based on corporations. We heard a little bit earlier from CFO at Ford and some of the things that they're able to handle, through, if you think about, there's going to be some price increases, there's going to be some supplier negotiations, there's going to be a drive on productivity to be able to handle the tariffs. I think, as he said, in the long term, and I would agree, that this is a good thing. We got corporate tax down, we got regulations down, we got repatriation of funds back, capital expenditures are up. It just doesn't seem to be connected in a fashion that we're usually used to. So
that, to me, sounds like maybe there's an opportunity then. I mean, because you sound like, the emotion and the sentiment behind the market doesn't match what we're actually seeing. When you look at what the Fed said recently in the Beige Book, and they're talking about wage increases, worker shortages. These are the kind of things that are the result of a growing economy. Maybe this is about political uncertainty and concern about the election, which would tee you up that if, the election goes in favor of President Trump and his policies, that maybe the market goes up after that. And this is the lull before the positivity, and it's an opportunity. What do you think of that theory?
Well, let's hope so, Melissa. I mean, if you think about, this administration has talked about another 10% or so tax cut for the middle class, which would be great. Obviously, if they hold Congress, they hold the House, we got a shot at it. If they don't, then we may see it go the other way. And then the administration will blame, of course, the other party that took control as to why they're not able to deliver this, middle-class tax incentive. So we got a lot of goes-ins and goes-outs and a lot of distractions that, unfortunately, are detracting from good, solid. You said it exactly. I mean, the economy has great momentum. Positive. If you look at all the charts over the last couple of years and you see, everything's moving to the right, and then you have a day like this, it's just hard to explain.
Well, I mean, you look at some of the comments. Firms are experiencing high turnover rates. They're having difficulty retaining employees. They're having to offer more benefits, flexible work schedules in order to keep their employees. Those are signs that there's lots of jobs out there. I mean, those are all really, really positive things that you're hearing. It doesn't seem like it matches this idea that we're at peak earnings or we're at peak growth.
No, I mean, exactly. I think, we saw the numbers a couple of days ago where the opportunities for jobs exceed the availability of individuals. That really is kind of a narrow definition of it. I think there's plenty of workforce out there. We just need to get them back and re-engaged. I mean, obviously, when you're competing for labor, you're going to have some cost increases. That's probably good for the individuals, right? Cost of living, wage increase. We saw that. That should all be good things for us, Melissa.
It reminds me of election night when when they announced that President Trump had won and you watched the market, really tank. And you had people like Paul Krugman coming out and saying, when will the market recover? In short, never. And you knew that was sort of personal and political emotion getting ahead of logic in the idea that it seemed like this was going to be a president who encouraged business, who cut regulation, who cut taxes. Then we saw the market take off. Could this be that moment again?
Well, let's hope so. Let's hope that good, responsible reporting like you guys are doing here, tends to settle, calm some of the anxiety out there, and we have a good day tomorrow, Thursday and Friday, and bring this thing back up where it should be, Melissa.
All right, we'll see. Bob Nardelli, thanks for stopping in. Come back soon.
Thank you.